Welcome back to the Joyful Investors channel. Today we're going to debunk the 3 biggest excuses that people often give for not investing. Are you part of that community that is anti-investing? Investing is no mean feat. Attempting to invest for the first time can be really intimidating. I remember how nervous I was when I first clicked on that buy button and the confirm and sell button. But as we progress, we soon realize that investing no longer seems as intimidating as it originally seems. Without further ado, let's take a look at the 3 reasons that people often give for staying out of investments. Reason number 1, I do not have time to invest. This is one of the most common reasons that people give for staying out of investments. These days, we rarely hear people use the term 9 to 6 to describe their working hours. And in fact, we are also guilty of cancelling our dinner plans at the very last minute. So as we struggle to cope with the long working hours and at the same time manage our other life commitments, learning to invest and starting to invest becomes a chore. Reason 2, I'm not rich enough to start investing. The high cost of living reduces the unspent portion of our salary. The desire for a higher quality of life also reduces the amount that's left over for savings and investments. How much money do we have left for investments? Excuse number 3, investing is too risky. Ever heard of this analogy? The stock market takes the stairs up and the elevator down. Right? This analogy is used to describe the high volatility and uncertainty of the stock market. From the dot-com bubble burst to the 2008 financial crisis, the 2015 Chinese stock market crash, and the 2020 COVID pandemic. The last 20 years have included some of the biggest stock market crashes in history and would have deterred many people from attempting to invest in those periods. This volatility and uncertainty bring about high risk for investing. So if the above reasons are true, what reasons are there for us to get started on investing? If investing is really that scary, why are there still so many people who are investing? Right, let me now show you why the above 3 reasons are just a facade. The time invested to invest will be worthwhile. While it is true that a typical day for an adult is usually filled with work, family, and personal commitments, it is still possible to find some time to start to learn how to invest. And I think the most crucial first step that you should take is to first truly understand and appreciate the importance of investing. Because by doing that, you will then be able to realign your priorities and time management to start learning investment. Start by setting aside at least an hour a day to read up on the basics of investing and build up your knowledge of investing gradually. Once this habit is ingrained into our daily routine, finding time to invest is no longer a chore. Remember, if you do not start now, you'll never start, because investing involves discipline and perseverance. There are actually more than 5,000 stocks in the US market, and even in a small country like Singapore, we have over 700 listed securities to choose from. Seems intimidating, but fret not. Let me now tell you that holding too many stocks in a portfolio is actually not good. Although we always say that diversification is good, but over-diversifying is bad. So in actual fact, you do not need to do research on the thousands over or hundreds over of stocks. Another fact that many people ignore is that the learning curve for investing is an inverse exponential function. Specifically, this means that the time spent on learning investing will reduce gradually and our investment in time will produce returns at a faster rate than the passage of time. Once you have spent the time to pick and select the fundamentally strong stocks to buy, you can just leave money to work for you. What you need to do is to just monitor your portfolio regularly to observe for any changes in the fundamentals or the financial performance of those companies. People who have no time to learn how to make money work harder for them can only spend more time working harder for money. You do not have to be rich to start investing. Another misconception that many people have is that their starting capital is too insignificant to start investing. They rationalize that the peanuts that they have are not going to grow into pistachios over time through investing. In fact, if you do not invest now, what are the other options that can help you to grow money faster? Let me introduce to you this concept called compounding. Compounding refers to the process of earning returns on returns. To illustrate, if we start with an investment of $1,000 that yields 10% after a year, we earn returns of $100. At the end of the second year, the returns of $100 from year one will also similarly yield returns of 10%, thus magnifying the total returns. So what's the catch? You've got to be patient and give it time. You've got to give time and allow compounding to work its magic to slowly snowball your initial capital. Warren Buffett, one of the most successful investors in the world, became a millionaire at the age of 30 with an initial capital of just a few $1,000s at the young age of 14. Nevertheless, Warren Buffett actually made 99% of his wealth after his 50s. This is due to the power of compounding, making larger and even larger increases in his portfolio. So start as early as you can so that you can see the power of compounding working its way to your financial freedom. Over the years, investing has also been made attractive for investors with small initial capital. If you do not know, in 2015, SGX released a change of lot size from 1,000 to 100 stocks, making it easier for investors with small initial capital to be able to claim a stake. Today, various brokerage firms are also competing to offer the lowest possible commission fees, to the extent zero commission fees. TD Ameritrade, for instance, has removed the commission fees for online traded US exchange-listed stocks and ETFs. This makes it more cost-efficient for investors, especially investors with low capital to start with. And this is not all. In reality, there are actually many stocks that are priced at an amount that is affordable for investors with a small initial capital. For example, in Singapore, we have the REITs. There are many REITs which are priced at Sing dollars, $2 or less per share. So by buying one lot of shares, you actually need to just fork out a few $100s. The golden rule is, what you think is what you get. Stop having that mentality that I am not rich and therefore I cannot invest. It's because you're not rich, that's why you should start investing now, right? It doesn't matter how small you start. What matters is how early you start, because the compounding effect will work its magic along the way. Catch our video, How Much Money Do We Need to Start Investing, to find out more. Manage the risk, not avoid the risk. Certainly, the huge swings in the stock market are not for the faint-hearted. In times of financial crisis, the market can be slammed down by a whopping 30%. Nonetheless, wise investors do not get scared off by such market crashes. They turn the tables around by adding more positions into the fundamentally strong stocks, while the other retail investors go crazy with the panic selling and crystallizing their losses. But let's take a step back to look at a longer time frame. Let's take a look at the SPY ETF. Do you realize that the prices rally up over the long term? In fact, most of the greatest gains in any given period are made from the direst of circumstances. Let's look at the most recent example. The COVID-19 pandemic resulted in a market crash in March 2020. The US market has since recovered over more than 70% for the Dow Jones Index and S&P 500 Index. Market always finds its way of transferring wealth from the impatient people to the patient people. Successful investing is about managing risk, not avoiding it. With the above substantiated points, if you still find yourself using any of the above reasons, it's time to act on it now. Feel free to watch the other videos on our channels to start on your investing journey. Thank you for watching this video, and feel free to leave a comment to share with us on your investing journey.